Okay, so right now I'm gonna show you guys a very simple strategy that'll give you entry points, exit points, and how long you should hold your trade. Now, I did a video of this using complete price action to find points of support and resistance. Now, for those that are not informed on how we get support and resistance manually, let me just give you guys a quick rundown. When you want to get support and resistance manually, what you need to do is that you need to go to a higher time frame of the current time frame you're in. So right now I'm currently in the 1 hour time frame. What I'm going to do right here is that I'm going to go to the 4H time frame, so I can just go ahead and put my phone in landscape mode. Now from this point right here, I'll go and mark the points where I see market mostly reacting to. So I'll mark those points where I see price mostly reacting to. Now with this, I've already gotten an idea of what the market is doing. As you can see, the market reacted to this point, so I had to mark that up. Now if you look within this area, we could see like this rejection that is happening within this area, so I had to mark that up. So once I've already done that, you can go ahead to go to the time frame I was currently seeing the market and everything. Now you can put your phone in vertical mode and you can use everything from here.
Now this right here is just like a surface level explanation. If you want a detailed one, you can go and check out the full video right here.
But in this video, I'm going to show you guys something that will automatically draw in those support and resistance points. All you gotta do is placing buy whenever the market is at support and placing sell whenever the market is at resistance. Now this right here is basically what we are going to be using. So I basically coined out this strategy for quick trades or scalping. Now let me show you guys something. Now this point right here represents resistance zone, and this lower line you're seeing right here is support zone. Now as you can see from everything, whenever price touches the lower part, we can see that retracement that happens, the reaction that happens. When price touches the lower part, we see the reaction that happened. Now in order to make visibility of the chart better, I had to change the candlestick to something that is very easily much understandable. Now before I go ahead and explain the strategy, let me show you guys how I was able to get these different indicators. Now to get this, what you have to do is to come to this plus button right here, go to the indicator section and type in Naderi Watson envelope. Although everything will start popping up when you just type in it. So we can see this very first one, Naderi Watson Lux Algo. Just tap in the first one. Now what you want to do right here is that you want to go to the settings section and go ahead and change the color from the green color to red. Now for the settings, you can just leave everything like that. The bandwidth should be 8, mode should be 3, source should be closed. You don't need to touch any of these things here, and basically you have this indicator. Now we're not just going to be using this, I'm going to be adding other things along the way, so you want to get everything completely. Now just like I explained, this topmost part represents a resistance point in the market, and this point right here is a support zone in the market. So basically we want to see an upward reaction whenever price reacts to the support, and we want to see a downward reaction whenever price touches the resistance.
Now looking at price movement here, we could see that price was respecting our point of support level and it went up. Now also at this point right here, price is also respecting the resistance level, so it also comes down. And if you look at the general thing that is happening here, you can see that price is clearly respecting those points of support and resistance given to us by the envelopes.
Now in order for all these things to be shown accurately, I changed the candlestick so that we can see when the market is purely going up and when the market is purely going down. Now in order to add in that different candlestick that I showed you guys, what you have to do is to come to this section right here and change the chart type.
Now what you want to do right here is to change the chart type to Heikin Ashi candlesticks.
So once you change the chart type to Heikin Ashi, this actually make everything much more easier to process. Now when you see green candlesticks, it's trying to signify an uptrend in the Heikin Ashi candlestick, and whenever you see like red candlesticks, it's trying to represent a downtrend. And one thing the Heikin Ashi does is that once the market is in an uptrend, it goes ahead to color each and every single candlestick green, and whenever the downtrend is forming, it colors each and every candlestick red, which makes everything much more easier. Now let's look at this from this standpoint. Now we could see the market went up and it touched the resistance level of the envelope. Now what do we expect when price touches the resistance zone of the envelope? We want to see a reaction. Now that's what exactly happened here. Now since the Heikin Ashi is coloring red, we know that the market is going down, so we can go ahead and sell to the next support zone. Now this right here, price touched the support zone. What do we expect? A reaction going to the upside. So that's exactly what happened. We started seeing that green candlestick forming and forming. Then we had a little bit of a consolidation here, price touching the resistance zone,
and we could see how price dropped to the support zone.
Now like I said, as this video goes on, I'm going to be leveling up the strategy. So what we're going to do right now is that we're going to add in the stochastic. So you want to come and tap into the plus button right here, tap into indicators, and what you need to do right here is to type in stochastic, just the stochastic. So you can go ahead and tap that in. Now what you have to do is that you have to go to the settings of the stochastic. So tap into the settings, and what you want to go into is the input. And what you want to do right here is that you want to change the key percent length to 10, and you want to change the key percent smoothing to 6, and you also need to change the D percent smoothing to 6. So once you've already done this, go ahead and hit OK. Now right here we have the envelope, and we also have the Heikin Ashi candlestick, and we also have the stochastic. So this right here makes a perfect combo. Now what the stochastic does is to show you points of overbought and oversold in the market. Now whenever price is at the 80 mark, it's trying to represent an overbought in the market, and whenever price is at the 20 mark, it's trying to represent an oversold in the market. Now whenever price is at the oversold, we expect the market to go up, and whenever price is at the overbought, we expect the market to go down. Now let me show you guys how the stochastic work with the envelope. Now we could see this part right here. Although price was close to touching the envelope before we saw that down reaction. Now when we look at the stochastic, we could see exactly the same thing. As you can see, price went up to the resistance zone and reacted again. Now we could see price show that is at the 80. As you can see, price show that is at the 80. At this point right here, price went past the 45 ball, very close to touching the 20 before it came back for another top up. Now we can see that exact come up right there. Now this right here is a perfect combo of a strategy. Now remember, you just want to use this to get in quick entries in the market. So if you're looking forward to get like long entries, I've already made a video on that. You can go ahead and check this video right here. If you guys love this video, make sure you guys hit the like button, and if you're not a part of the family, make sure you hit that red subscribe button. And with that being said, I'll see you guys in the next one. Peace out.